All righty, let's take a look at our weekly trade recap from the week ending on the 12th, I believe. So here's the results for the week. We were up $1,635 on the week. And let's jump into the trades. First trade we see here is a 0 DTE Iron Condor on the 8th. So this was a full Iron Condor, low delta. We opened it for 55-cent credit, closed it for a 10-cent debit. So it was a 0 DTE trade, $450 winner on that trade. Nearly 82% premium capture, almost a 5% return on the margin on that trade. Next trade is on the 9th. So May 9th was another 0 DTE Iron Condor. This time we opened it for 65 cents. That was the 40.90, 40.80, 41.50, 41.60. Again, these are 10 wide. Low delta Iron Condors. Opened it for 65 cents, closed it for 25 cents. That was a $400 winner. 62% premium capture on this and nearly a 4.3% return on margin. All right, then on the 12th, on the 12th of April, we opened our weekly strangle here in gold. So this was a 1800 24.75 strangle. We opened it for $12. We closed it on the 10th for $6.40. Again, we take off the most profitable gold and ES strangle every week and put one on for each of those futures trades. So we were 28 days in trade on this one, made $560 on this, which is a 47% premium capture, so nearly 50% in those 4 weeks, with a 28% return on margin. So great return on margin. Also on Wednesday, we closed our ES weekly strangle, the 3400, 4700. We put this on again on April 12th for 24.25, and we took it off on Wednesday the 10th for 12.50 debit. So 28 days in trade, nearly 50%, so about 49% premium capture with a 14% return on margin. Again, $588 on this trade. On the 10th, we also closed out one of our Amazon trades. We had an Iron Condor on this trade. We were only in it 2 days. It started to go away from us as Amazon started to make a move, and I just wanted to get out on this particular trade. So we opened it for a 39-cent credit. We took it off for 75. We lost $360 on this trade. We're only in it 2 days. I just wanted to get out in case Amazon started to run away from us. Likewise, we also sold on the 10th an Amazon covered call against our synthetic stock trade that we have on. We sold this for 60 cents. We took it off on the 10th for $1.61. Lost $300 on this trade, which is all good because the synthetic long was up significantly more. So whatever we would lose on this trade, we make almost double on the synthetic long. So we made over $600 in that same period on the synthetic long. So that's all good. And then lastly, on Thursday the 11th, we did a put spread. That was a 0 DTE put spread. Looked like the market was only going one direction. So we did a 40.90, 4100 put spread here. We opened it for 60 cents. We closed it for 30 cents, took a 50% winner on this one, a little over 3% return on margin for another $300 winner. We did not have any trades on Friday the 12th come off. So again, for the week, $1,635 to the good. On our end, none of our big LT112s or any of our other strangles on futures were closed. So we have a lot of that coming up next week that ends on the 19th. But for the week ending May 12th, $1,635. That's it for our trades for the week. If you guys have any questions, please subscribe, click the like button, feel free to comment. We'll see you guys next week in our updates. Thanks. Bye-bye.